Hello, everyone. Welcome. Thank you for joining me for our first topic of our 2019 webinar series. My name is Beata Dragovic, and I'm the founder of Freedom Trail Financial. We are an independent wealth management firm in Boston. We have been working with clients in the biopharma field for the last 15 years. We work with our clients on comprehensive, personalized financial planning and wealth management strategies. And we also consult extensively on equity compensation strategies, including stock options, RSUs, restricted stock, and ESPP plans. During times of transition, we also help reviewing offers and negotiating the new compensation package whenever it is possible. As for this webinar, we will touch base on the latest compensation trends within the biopharma industry. Then I would like to change gears for a little bit and introduce you to what is holistic planning and what that means as it comes to your financial plan. We talk about this a lot lately. It became very popular, so I wanted to make sure that we talk about that. We'll also talk about the tax considerations of the various grants you are receiving, and we will look at how this all fits within your overall financial plan. So 2018 was a very strong year for IPOs, and there is a continuous M&A activity that's just constantly present. Technology companies are entering the biopharma sector, and we probably all of us noticed markets have been volatile. So all these factors are, as well as the ongoing demand and competition for talent within the sector, are affecting the compensation structures. Mass Bioed actually projects that employment growth will be over 17% by 2023 in the sector, within the sector. And they also reported that life science companies have been adding to their workforce at double rate of the economy in the last 10 years or so. So what we've seen is that long-term incentive plans have become very popular. And as it comes to these plans, it's all about diversification. The majority of the companies offer a mix of two or more vehicles, such as options and restricted stock. And the use of performance shares has more than doubled in the last 10 years. And stock options, has actually declined. In the last 10 years, it went from approximately 70% to 40%. That's a very interesting statistics. Of course, your compensation package is so much more than your equity compensation. I would like all of you to encourage all of you to think about your compensation from a different perspective. You really need to think about your base salary, your annual bonus, and probably the most important part of the package is for everyday living is these two, and even to achieve your financial goals. Next to your performance and incentives and equity awards, you also have to pay attention to your severance benefits. That's the other part I really want to point out. As mentioned, there is such a significant M&A activity within the industry, and that calls for looking at the severance package, not only when you are leaving a company, but even when you are applying for a new position. I highly recommend that you take this part of the compensation seriously and negotiate your severance package whenever you can. So let's talk about holistic planning for a minute. As I mentioned earlier, I would like to spend here a few minutes. I really would like to invite you to take a step back and try to transform your perspective of how you think about all of this. And this is what I meant on holistic approach to planning. I pretty much suggest and I pretty much believe that during the most important moments in our lives, we probably don't think about stock options or tax planning. I am very sure all of you will agree with me on that. So really what you want to think about here and take a step back is that what are your most important values and beliefs about life? What's most important for you? And this is important for multiple reasons, but most importantly, in order to make any kind of financial decision, when you really understand deep down why you are doing everything that you are doing, making decisions about money will be much easier. I believe that's true for all parts of life, and it's going to be the same making decisions about money as well. With that said, you need to understand what kind of investor you are, whether you are a wealth accumulator, potentially corporate insider, or you are already financially independent. Of course, you can be a combination of any of these two. If you are a wealth accumulator, you most probably have multiple financial goals. You are working towards potentially an education goal for your children. You want to buy a home, a second home, and saving towards being financially independent. In this case, you need to definitely make sure that your portfolio is diversified. You need to understand the level of risk you are willing and you can take, actually. And when you are saving, obviously, for covering college expenses, that is 5 years away, you will invest and make decisions very differently than when you are saving for retirement. And that's the same philosophy that you should follow when dealing with company stocks, such as when to exercise options and how to make decisions on keeping or selling a stock. I would suggest that you are going to take much less risk when you have a goal that's within 5 years versus when you have a long-term goal. If you are a corporate insider, and this could be, and this probably will be a presentation in later on this year, a webinar on this topic, but in that case, you face additional planning considerations because your actions are highly visible and you are watched by regulators, your shareholders, and most probably your employees as well. And your best course of action, obviously, is to arrange what we call a Rule 10b5-1 trading plan. This plan will allow you to set guidelines way in advance of how you will exercise options or sell company stock. And again, you can be financially independent. If you are that, your major concern will be obviously to preserve your wealth and potentially to leave a legacy, and your decision about wealth will obviously reflect that. So I definitely, after you understand your most important values, your financial goals, you need to assess where you are financially, and these three, whether you are a wealth accumulator or financially independent and or also a corporate insider, these will help you to do that and follow that. So let's look at the two most common equity compensation plans that are being offered currently, and this is what we will mainly spend our time today on. And those are stock options, non-qualified and incentive stock options, as well as stock grants, RSUs, and restricted stock. And this is what we will majorly cover. So what is a stock option? A stock option is your right to buy a stock at a certain price, which is the grant price, that your company offers to you, and you do this within a specific period of time. You don't own the stock till you exercise the option that is offered. And I have to mention that receiving a stock option is not the same as receiving an actual share of stock. Option holders have no voting rights until they become shareholders, and they become shareholders by exercising options. A restricted stock unit or a restricted stock is a transfer of company stock to the employee with the subject to a vesting schedule. In case of RSUs, you don't own the stock at grant, but at vesting. Usually there is a vesting period, and on the vesting date, you will have compensation income subject to ordinary income tax rates. And we will talk about taxation in detail on our next slide, so we'll leave it to that. Restricted stock is a grant of company shares made directly to you. Usually, however, you cannot sell or otherwise transfer the shares until you have satisfied vesting requirements. As long as you continue to work at your company, you will not forfeit your grant, and it will not expire. I do want to talk about 83B election here. It is a potential tax strategy if you receive the restricted stock grant. And again, only with the restricted stock, it's not true for restricted stock units. By making this election, you are actually paying the taxes at the time of the grant versus vesting. So if your company stock price rises between grant and vesting, the amount of tax you paid on the lower value of the grant will be obviously lower than the amount you would have paid without the election on the higher value of the vesting. So you probably are most probably bullish on your company stock if you do this strategy. If you choose to make this election, you also must do it within 30 days of the grant date. You need to remember that you will need cash upfront to pay the taxes due to at grant, as you cannot sell any shares um, until they vest to cover that. And if you leave your company, there's a risk, because if you leave your company before the vesting date and forfeit the restricted stock, you will not be able to recover the taxes that you paid earlier. So you need to make sure you understand when you are doing this strategy. So as mentioned, let's review the various tax implications of these grants. And I would like to immediately start in the middle there with incentive stock options. These are tax advantage form of options that have to meet a defined set of criteria. And under these tax paper rules, generally you will incur income tax liability only when you sell your shares and not when you exercise your option. If you hold your ISOs for a period of at least 2 years from the grant date and 1 year from the exercise date, as you can see that in the middle. If you keep this holding period requirements, generally the sale of your ISO shares will be subject to tax at long-term capital gain rates, and you will not have any tax due upon exercising of your ISO, and will pay taxes only on sale of the shares. On other hand, if you are exercising ISOs with a larger spread, so the spread is the difference between the exercise and the grant price, you may be subject to alternative minimum tax at the time of the exercise, and this spread will be included in your W-2 solely for the purpose of AMT, so the alternative minimum tax. And at the end of 2017, the Tax Cuts and Jobs Act raised the AMT income exemption amount and the income point where the exemption starts to phase out. So this actually has reduced the likelihood of triggering this AMT. So the idea here is that hopefully companies will take advantage of this and start offering more incentive stock options, as more people will be able to exercise ISOs without triggering this AMT. If you exercise an ISO and sell the shares you received before the end of the holding period, you will have what we call a disqualifying disposition, and that the tax treatment will be as for non-qualified stock options. So basically, technically, the ISO will become a non-qualified stock option. And what is a non-qualified stock option? With that said, any option that does not qualify to receive this tax advantage treatment of an incentive stock option is basically a non-qualified stock option. And in my experience, based on my experience, over 95% of option grants are non-qualified stock options. So upon exercise of a non-qualified stock option, you will have compensation income subject to ordinary income tax rates, again, and that will be determined based on the spread between the fair market value of the shares when you exercise the option and the option's exercise price, even if you continue to hold the shares. So your company is required to withhold taxes on exercise at the minimum statutory tax withholding rate. If you do wait to sell your shares, you will have short-term or long-term capital gain on the difference between the exercise price and the sale price, and that will again be based on how long you hold these shares. As for restricted stock units, those are the right to receive shares of company common stock upon vesting, and this is at no cost to you, and RSUs generally vest on a yearly basis from the grant date. On the vesting date, as it comes to taxes, you will have compensation income subject to ordinary income tax rates, so it's similar to non-qualified stock options, based on the fair market value of the common stock that vests on that date. And even you will pay this, you will pay income taxes, obviously, even if you continue to hold the shares. Your company is required to withhold taxes here as well at the minimum statutory tax withholding rate. And if you continue to hold the shares after vesting, you will have short-term or long-term capital gain, depending upon, again, how long you hold the shares and based on the appreciation in the value after the date of vesting. So that's a summary of taxation, and I have to mention, and we'll mention it a few more times, always consult your tax accountant as it comes to taxes, and your tax advisor and your advisor. Seek out help of an advisor. So just to summarize some of the important points we made, in case of restricted stock and RSUs, plan for ordinary income at times of vesting. In case you plan to leave the company, assess what you have and remember your vesting dates. And remember the 83B election potential. It's only in case of restricted stock. In case of stock options, especially ISOs, first of all, contact an advisor and the tax accountant, as I just mentioned. There are a lot of nuances about ISOs that I didn't cover. And you also want to understand the AMT as much as possible. I also would like to encourage you to understand how to value your stock options accurately. This can be actually an excellent way for you to negotiate and increase equity grants at time of transition or even at promotion. So basically, the forfeit value of your stock options can be viewed as the opportunity cost associated with leaving your company. Keep track of your vested and non-vested options, as the forfeit value of your options includes actually not just the value of your vested options, but the in-the-money value of your unvested options that you would leave behind. So understand what you have. Keep track of it. And as a general rule, you want to wait as long as possible to exercise options unless you have cash flow needs or for a financial goal. And you should always exercise early in case you need to raise cash for a goal. I always mention this. And as well, taxation shouldn't be a reason either for holding stock options, because especially if you have a financial need. So with that, all of this aside, I want you to understand that employee stock options have leverage, and obviously stock grants, restricted stock grants, do not. So the increase in the company's stock can have a significant impact on your option portfolio, which is not the same for restricted stock. And that's the only reason that I'm mentioning here, leverage. So very briefly about tax rates, there were no changes in the capital gain tax rates with the Tax Cuts and Jobs Act that came into effect at the end of 2017. The individual tax rates have been lowered a little bit. And as it comes to, I've been talking about the AMT in the last few minutes. So the idea again is that, and I mentioned this before, that companies hopefully will take advantage of offering more incentive stock options as less people will be, as actually more people will be able to exercise ISOs without triggering the AMT. And what happened here is what you can see in front of you is that the AMT exemption amount actually in 2019 is for joint filers is over 111,000 and over 71,000 for single filers, and the income where this starts to phase out is over $1 million for joint filers and over $500,000 annual income for single filers. So that's I wanted to point out again. And one more note on this slide, and for those of you who work for a private pre-IPO company, I would like to take a minute and talk about this so-called Empowering Employees Through Stock Ownership Act. Stock options and RSUs are very popular at startups and late-stage pre-IPO companies, obviously. However, shares in private companies lack liquidity. I'm pretty sure you all know that, and they cannot be sold, creating difficulty when taxes are owed at the income on the income that you recognize. So the Tax Cuts and Jobs Act introduced a deferral opportunity for certain types of stock compensations at private companies. And under this new provision, employees who receive qualified grants, and this only qualifies for non-qualified stock options or restricted stock units, they can defer for 5 years the income recognized for federal tax purposes at RSU vesting or non-qualified stock option exercise. This is what we'll call an 83I election. Haven't seen too many of these yet, as it's very new, but actually haven't seen any of these. just yet. To qualify as a deferral eligible equity award, the company's grant must meet actually conditions, and you must follow the provisions, tax rules. So there's definitely you need to understand your company's document and whether you are eligible. So you are. I had to mention just very briefly once more about how you need to look at your stock compensation as a whole, and you are all aware of the constant volatility of the stock market as well as the life science industry. And I wanted to talk about this as I see folks making very different decisions about their immediate financial lives because they depend with their stock options on their financial goals for immediate needs, and options can be very, very volatile. So I want you to understand that volatility is important part of investing and is constant. So I recommend that you get comfortable with the concept. And I would always consider equity grants as a long-term planning tool. You can use them in the short run, but you have to be comfortable with volatility and you have to be flexible with your time frame. I would encourage you to understand your rewards and obviously seek help from an advisor at all times. So how does this fit into your financial plans? Let's just very quickly summarize what we talked about and ask really a few questions. What is the questions that we need to be asking? So start with your goals as discussed. To make the most of stock options, you need a financial plan that considers your goals for the income, identifies decisions you must make with your grants and shares, and obviously factors in taxation. So what is the vesting period of your stock options? Restricted stock or RSUs? What goals must be met for the vesting of performance shares? You need to understand that. What are the specific features of your company's stock and the stock plan? Does your company have blackout periods when you actually cannot sell the stock? Do these shares pay dividends? Will your company allow you to engage in hedging with its stock when you have highly concentrated positions? How do you see the future of your company stock, and how do you see your job? How likely it is that you will actually receive additional equity awards? Then you need to understand your tax bracket and how will an income spike from option exercise or restricted stock vesting push you into the higher tax bracket potentially, and you need to understand that. Also about capital gains and losses. You need to understand if you had them already in the present year when you plan to exercise more options. Then as it comes to diversification and concentration, how much of your net worth is tied up in your company's stock? Should you sell your shares to diversify or explore any other strategies for concentrated stock positions? Are you charitably inclined potentially? Do you want to make donations or gifts with company shares or set up charitable trusts? Those are good questions to ask. And then obviously about estate planning. Do you have a substantial estate and net worth, making it pretty much prudent to undertake estate planning? And make sure that you start by knowing the answers for all of these questions and many more. So I just want to encourage you again that one solution doesn't fit all. And as a role in personalized medicine, as a role for personalized financial planning, decisions always should be different based on the context that you have for it. Always remember that. So I hope this was helpful. Thank you so much for your time. Please do not hesitate to call or email me with any questions. And at the same time, feel free to go on our website and request an introductory call. We are here to help you and continue the discussion. Thank you so much. Look forward to speaking with you and have a great day.